Very good morning, everyone. This is Rajendran here joining from Market Calls and welcome everyone to Price Action versus Order Flow. So we are in the part 2 of the training session here. It is also a preview webinar for our upcoming series, Masterclass on Order Flow. So let's quickly kickstart with today's session. In today's session, what we're going to learn is we're going to discuss about last Friday's order flow session. I'm going to run a simple order flow drill. So before to that, we're going to get some very basics about order flow, right? So first of all, let's try to understand what exactly is order flow is all about, what exactly order flow shows. See, order flow shows executed market orders only. It will not show the pending limit orders. It only shows the executed market orders. And order flow bifurcates the market orders into buy market order and sell market orders. Buy market order will be mostly on the right hand side inside the candlestick charts, and the sell orders will be on the left hand side of the candlestick charts. So if you see the order flow charts, you'll be seeing the candlestick charts. Inside the candles, you'll be seeing the volumes, and the volumes will be separated as an buy side volume and sell side volumes. Last series also we discussed about that buy market orders always will get matched only with the sell limit orders from the order book, and sell market orders always match with the buy limit orders from the order book. Now, let's try to understand different types of market participants. So when you're looking into the order flow, right, sometimes you'll be seeing a smaller volume, sometimes you'll be seeing a bigger volume, sometimes you'll be seeing a extraordinary bigger volumes. Right, that is what we're going to see. Last Friday's price action, a new contract started. I mean, the May series contract started. Of course, Nifty lot size came down to 25. Right, so we're going to see the interaction of different market participants via order flow. Right, so you can see how the intraday traders and scalpers they behave. So intraday traders and scalpers, they are like they try to enter into the market. They'll be looking for a fast trade and then they'll be looking for a quicker exit. Right, most likely they'll be coming intraday and then they'll be closing their positions. They will not carry forward their positions. That is what intraday and scalpers are all about. Short-term traders, typically they carry forward their positions to the next day. So maybe they might be carry forwarding up to like 3 to 10 days. That is what short-term traders are all about. And intermediate traders, they play with a very big size. In fact, even short-term traders also, some of the short-term traders are dominant traders. They do also come up with a heavy volume activity, right? And compared to them, intermediate traders, the frequency of the trading is very lesser, but the size of the trade will be very, very bigger. So when they are coming into the market, they'll be slowly accumulating or they'll be slowly distributing. Sometimes they also can bring extreme volatility also. And then we have long-term players. They choose a very, I would say like they'll be choosing a very selected battles. They don't participate on a battle in the markets on a day-to-day basis, but they choose very selective battles and they hold their positions maybe more than 6 months, sometimes more than 1 year, sometimes more than even 5 years or 10 years also, right? But they accumulate, sometimes they reaccumulate, sometimes they mostly look for value investments. They mostly focus on fundamentals, right? So the intermediate players and long-term players mostly focus on fundamentals, but that's not the case with intraday traders and short-term traders. You know, right? Fundamental is a slowly moving concept. They focus mostly on volume activity. I mean, the intraday traders, scalpers, and the short-term traders, they focus mostly on price action. They focus mostly on technical indicators, and they also focus more on the immediate news-based price action concepts. That is what mostly the intraday traders, scalpers, and short-term traders, and they contribute to almost 80% of the volume, more than 80% of the volume on a day-to-day basis. So if you're randomly buying from somebody, you are most likely going to end up buying from an intraday traders, scalpers, or a short-term traders, right? Even though they are relatively a small community, but their transaction, the volume of the on a day-to-day basis, the volume these participants they make on a day-to-day basis relatively large in numbers because they take mostly short-term bets. Now, few concepts before getting into the Friday order flow drill, right? So, one of the important concept is the delta. So, delta is nothing but total number of buyers inside the candle minus the total number of sellers inside the candle. Basically, the difference between the total buyers minus total sellers. If I add up all the buyers on the right hand side, followed by all the sellers on the left hand side. Let's say I'm summing up all the buyers on my right hand side. I add up all these numbers and then I add up all the sellers. Now, once I do the subtraction between total buyers minus total sellers, I may end up getting a positive value sometimes. I may end up getting like a negative value sometimes. So if I am getting a negative delta here, if the delta is negative, so which you can see it from a candlestick part also. So how bigger the delta it is this delta is negative or how bigger the negative delta, that is what this candlestick of the delta shows. So here the number that you're seeing is like 503. So 503 is the delta here. So what does that signifies is like that particular bar, more sellers dominated. So maybe I'll try to zoom up and then I'll show you. So let's say if you go to this particular candle, 2 o'clock candle, you could see that the number is like 503. What it signifies is like that particular candle, there are 503 more aggressive sellers who placed market orders compared to the buy orders. So the delta shows the aggressive of the market participants. How aggressive it is, we'll be mostly able to see from the delta activity and also the delta candles. Now, if you could see the positive delta here, so this is the candle like 215 candle. If you could see that the delta becomes positive around that level. 327 is the delta here. So positive delta, what it shows? It shows that that particular candle is having more buyers, 327 more buyers compared to the sellers. Now, this context we will not be able to see from a simple price action alone. Simple price action, you will get some volume information, but that volume information will not provide clarity. That volume information will not provide context. But here, you will be able to look using a magnifying glass. You can look inside the candle and you can see what kind of volume activity is happening inside the candle, right? That is what we'll be able to see through the candlestick charts. In a typical price action charts, maybe we can assume only, maybe it is a doji, maybe it's a big candle, maybe buyers are dominating, sellers are dominating. We can only able to assume. But here, when it comes to order flow, it's completely transparent. You don't need to assume anything. You can visually see what is literally happening at a ground level, what is happening. So who is doing what buyers are doing, what sellers are doing at each and every candlestick charts, you will be able to completely see through those information. Right. So I would say like it provides one more layer of clarity in thinking when you are initiating any trades or when you're making any trading decisions. How much confidently I can take. So using order flow, that kind of trading decisions, we can make it. Now, let's try to understand another concept called volume cluster. Right. So volume cluster, usually we see around opening of the markets. Now, you know, why volume cluster happening around the opening of the markets? Because when the market opens, there are a lot of traders, they want to trade. Now, if you see many beginner level trader or maybe 1 or 2, 3 years older trader, right? They usually waiting for the markets to open. When the market opens, they're the first guy to place the order. Somehow they want to find an opportunity. Somehow they want to make some quick trades. So that is the reason if you see any day, the opening volume will be always at the highest. Now, that too, if the price opens with a big gap up or a big gap down, right? The volume activity, the volume flow of the first bar will be relatively high. So talking about an order flow trader, if you are an order flow trader, focusing on the opening bar is always very important because that will give you the clue how to position for the day. So the chart, what I am using is a 5-minute chart. Now, if you could see that a cluster of volume activity has been happening around these levels. This is on 14th September, slightly a pretty older chart, last year's chart it is. So where the volume activity is happening, you'll be able to see some thick, dense volume activity over here. So automatically you can draw a zone around that level. That zone is pretty much important. I'm going to show you right now how the volume cluster happened on last Friday. So what I'm going to do now, I'm going to show you the last Friday's price action. Let's try to. So here I'm making a replay of last Friday's price action. Initially, I'm running at 4 times of the speed. So if you could see that the market opened 9:15. So here you can see the market timing over here. And you can see how much time the market activity is running. So I'm running at a 4 times speed. So if you're running at a 4 times speed, you can see that how the volume activity is happening. And what you'll be noticing at the opening of the bar is like, you will be able to notice a lot of zero zones. So what are these zero zones? Anybody? Can anybody say, just think for a moment, why I'm seeing a lot of zeros over here? Maybe I'll enable the chat box over here. You can reply it back. So what could be the reason why there are a lot of zero zones? Some places you are seeing and fill, the volume is getting a fill. You can see that when the price moves up, it will be filling on the buying side. When the price moves down, you can see that relatively the volume is filling on the downside over here. Of course, I'm seeing you're seeing every second, you're seeing the 4 seconds of activity here in the markets. You're able to understand why there is a lot of zero zones. Let me tell you why there are zero zones. The zero zones are like kind of empty location where there is no limit orders are there in the order book. So the market opened and then the market was very jittery. When the market just opened, not all the price is having limit orders. So sometimes the price to jump around the open, you can see this kind of crazy volatility because the volatility usually happens around the open because just now only the liquidity start coming into the market slowly, right? So as the day is progressing, you may not see that much of a zero zones every now and then. Very rarely you're going to see the zero zones. And focusing on the zero zones is very, very important because those are the zero liquidity zones, means lack of limit orders. So first bar, what we can able to see, you're able to see the cluster of volume activity, right? So here the numbers, what you're seeing is in terms of lot size. I had divided the complete volume activity by 25. So since I had divided by 25, the volume activity, what you are seeing is in lot size. Means if I'm seeing a number 1936, that particular price point on the buying side, 1936 lots got traded on the buy side. So likewise on the exact equivalent to the opposite side, I'm seeing 1627. That's the sell side volume activity, right? So usually 1627 lots got traded on the sell side over here, right? Very, very important one. So what you're watching is a cluster activity. So clustering, sometimes it brings some sort of a positioning also. Now you may ask, who comes and trades on the opposite side? So we know who is coming and buying on the opposite side. So usually the buyers are mostly the traders who want to participate at the open, because every day when the market opens, many traders would want to take an initiate. I mean, usually many traders, they want to initiate their trades. Now, maybe you can go and check back your behavior, how many times you participated around the open. So let me tell you, the answer could be like many times. The reason is, sometimes we will not be able to control our emotions, out of control, right? So we want to find trades very quickly. That's what the nature of the trader itself. Many traders, they want to find opportunity the moment market opens. But frankly speaking, not every time the best opportunity happens at the open. The best opportunity happens sometimes around 11 o'clock, sometimes around 1 o'clock, sometimes around 2:30, sometimes around 3 o'clock. Sometimes it never happens at all, the best opportunity. So concentrating around the open, if you are seeing volume clusters, then your attention has to focus on the volatility part. So how is the recent volatility is happening? Is it good or bad? Is it high or low? Of late, if you could see, even though India VIX is dropping down, the volatility is still not reducing at all. On a day-to-day basis, we've been seeing some quite a high fluctuations in the markets. So let's say I'll try to simulate the price action here. So you're seeing this volume activity. Let me completely run this price action. So what needs to be observed during the market opening is like how the volume flow is happening. So what kind of flow it is? Is it a big flow or a low flow? So opening volume is like 13,581 lots, definitely and relatively a decent volume. Volume cluster has been there. So naturally, one have to give too much importance on that. So I'm just increasing the speed to 8, almost 10 times of the speed is what I'm increasing. You could see the second bar volume activity. One thing you can able to see that the volume is higher, but it's still kind of started slowing down. So usually opening, I would say like first half an hour, the volume will be relatively high. Then market volume might reduce, might not reduce. Later on, we can see that. But majority of the time, opening volume will be very high. Midday volume will be very low. And the closing volume also relatively going to be the highest. So I'm just marking the zone here. So you can see that where the clustered activity is there, the volume cluster activity, I'm just marking it like a zone over here. Now this zone is going to be, this price action zone is going to be an area of importance to me, right? Let's say I'm just marking the zone. I'm going to extend this zone till 27th. So it means the day, an entire zone will be extended till the end of the day. So you can see that the market is going sideways. The first 5-minute high and first 5-minute low is still not taken down yet. But still, the volume activity is still relatively high. If you could see the volume activity, you can see at the lower base, current volume is like 587, 643, 739. That's a number it's running at the bottom. So I'm going to increase the speed further. I'm going to increase it to like 20 times of the speed now. Still, you can see that a lot of whipsaws are happening around the volume cluster zone. Still, there is not much of a decision has been taken in the markets. If you could see the delta activity also. So basically the delta activity is like kind of being slowed down, not much of an aggressive activity, even though the overall focus is on the buying side. What is happening is like price is still trying to trade again and again around the cluster, right? Some of the places we also seen some big delta activity also, like 925 bar and 935 bar. You can see some relatively a very high volume also happened. Now, once again, price action has been breaking down. Now, what you could have been seen by now, time is like 9:55. So what you had seen is like slowly the volume started coming down. But still, one thing is very clear. Price is still trading through the volume cluster. Now, what it says is like it says that there is some sort of an indecision is happening. Still, nobody had taken any strong decision yet, whether to go long or whether to go short, right? But something have been happening at 10-5 candle. There has been a shorting opportunities coming over here. I'll tell you, like, as I said, many a times the trading opportunity doesn't happens at the opening of the bar. Sometimes it can be around 10 o'clock. Sometimes it can be around 11 o'clock. Sometimes 1 o'clock, 2 o'clock. Sometimes it doesn't, or it never happens at all. So something interesting is happening from the delta perspective. So what is happening interesting around the delta perspective? You can see that the delta is happening like almost 1,450 blocks. Like so, minus 1450. So if you could see that the bigger delta, you could be able to see like the delta activity is like very much bigger. 1450. That is definitely a very big volume activity. That shows that there is a significant amount of sellers they entered into the markets, right? So usually with this kind of fluctuations, we'll be typically expecting, since the volatility had cooled down a little, so generally I'll be expecting like 50 points from the entry point. right? It is not an scalping trade per se, but I would say like it is more of an intraday trading opportunity. Sometimes it will take a little bit of time to come down. So what needs to be monitored is like the volume cluster activity needs to be given more importance over here. So where is the volume cluster zone? 22685 to 22675 zone. That level needs to be given more importance, right? So there are a couple of interesting places that you will be seeing how the price action is trading around. So once again, what you are seeing? So what I'll be focusing here is like how the volume flow is happening. Again, if you could see the volume flow, I would definitely say like volume activity has been drastically slowed down. Now it has been keep on slowing down and down and down and down. So almost we are approaching around 10:45, right? So around 10:45, if you could see the volume flow has been slowly coming down. So this is like kind of a beginner level observation, how the volume flow is happening. Because if you are using order flow, one of the key thing that you have to learn here is how to read the flow of volume activity, right? So your focus should not only on the buying side or selling side, the overall volume activity also, how it is happening, each and every bar, how the volume activity is happening. So then only it will be easy to understand is certain volume is happening because of news, certain volume is happening because of a stop hunting, or certain volume is happening because of exhaustion, right? So what are those exhaustion points? Or is it an absorption, or is it an initiative activity? Or is it, if you are seeing a lot of zero zones, is it because of some algorithm running in the markets? Or is it because of some crazy volatility in the markets, right? So recently we've been hearing about that Jane Street traders. I mean, the Jane Street algorithm. It has been used in our Indian markets. The high frequency traders are using it to bring volatility, to chopping out the option sellers on either side. Right? Those kind of news that you would have been able to see off late in that in the portals, like mostly in the news media channels, you'll be able to see in such kind of news. Yes, off late, the expiries has been getting more and more volatile, and that is making the life of option sellers little difficult. Earlier, it was pretty easy for them, but now it has been little challenging for them because the volatility in the markets has been getting crazy. But still, if you are an order flow trader, you will get even more better clarity in thinking about what is happening inside the markets. So what we are seeing right now is like a lot of consolidation volume is what it's been happening over here. Let me continue the price action. So I'm going to run now by like 50 times of the speed. That's what I'm running now. Anyways, so the line, whatever the line I marked, that's the kind of an entry point. So a couple of times it's been touching those levels. Now we'll be watching a very interesting concept, what is happening right now. So price action is moving towards that chocolate brown color line. That is nothing but the VWAP levels. You can see that price went only one TP above that level, I mean, only one brick above that level, and then it got rejected. So I'm just talking about this level around 11.5. So 11.5, you would have noticed that. So price went only one TP above that, and then it got rejected over here. This is what we call as an one tick rejection around VWAP. So this is an pretty interesting strategy. Usually, mostly for the quick scalpers, they'll be using this one tick rejection kind of strategy setup. But if you could see that volume activity completely stopped. So usually when the volume activity is getting stopped, that means like, so typically it's normal because during mid of the day, right, liquidity in the markets, the limit order supply in the markets will be very thin. So the transactions also will be mostly very thin. If the liquidity is very thin, naturally the transaction will be thin. If the liquidity is very high, then volume transaction also very high. So opening liquidity always will be very good. That's why you'll be seeing always big volume activity around the open. But as the day is progressing, if it's a regular trading day, you'll be seeing like most of the bars, you'll be seeing like lightweight volume bars, ultra thin volume bars. Mostly you're going to see this kind of volume price action. You can see that still market is moving lackluster, market is rotating, not much of an impulsive price action, not much of a news flow, a new series started, right? So regular volume, regular activity is what happening. But that's not the case post the second half. So time is like around now 12:25. I think post 1 o'clock or post 1:20 or something around that, the volume intensity got a little bit bigger. You can see that still the VWAP levels are still not tested yet. So means still market is still trading on the negative side, not much of a clues. Market is still trading with a lackluster volume. So volume flow has been completely stopped over here. We could clearly see that volume activity, almost every bar, the volume activity is mostly less than 3,000 lots. So which will be relative seen as an lower one. But if something has been changed, if you could see that 1320 bars, the delta has been getting big selling pressure. But if you could see that, maybe if you could go a little bit back, so right from 1 o'clock onwards, the selling pressure has been there. There's been a mild selling pressure has been there. Every other bar is a delta, negative delta. If you could see that continuously, there is a continuous stream of negative delta is what we are seeing. So means slowly, only the sellers are the one who is in this market, right from 1 o'clock onwards. So till right from 1 o'clock till, if you could see like 2 o'clock, the seller intensity was like, still it's been keep going on, right? So there is not much of an, I'm talking about the delta activity. If you observe the delta activity, so only the selling volume only would have been seen around that levels, right? So naturally, nothing much happened later on. Market went little sideways, but from 1 o'clock to 2:30 or 2:35, there has been a strong flow of seller flow happened around that level with a continuous negative delta. Continuous negative delta is one sign of a momentum. That momentum has been there for almost 1.5 hours. The momentum was there, and followed by that, what you can see over here is like, again, if you could see the last hour of volume activity, you can see what volume flow has been again increased. You can see like 6,000 lots, 10,000 lots, 7,796 lots. So the volume flow again in the last hour, it has been increased. Any idea why the volume flow increased in the last hour? You know, right? Mostly the square of intraday square of do happen because of that. And mostly institutions, they love to, bigger institutions, like they love to accumulate a distribution, mostly around the last half an hour or so. Most of the smart money, long-term smart money, they love to make trades around the near to the market closing. So most likely they would like to trade around that. There is no thumb rule, like they always have to come at the last only, but usually volume in the last half an hour will be mostly at the biggest one. This you can see on most of the indices, Nifty, Bank Nifty, and most of the indices. And even in stocks also, the similar pattern you will be able to watch over here most of the times. It's a very interesting one. You can see that the density of the volume is relatively high, particularly around last half an hour. Very, very high typically. But opening volumes will be very aggressive. When the market opens, particularly with a very emotional gap down. So you can see like volume activity will be very, very higher. So overall, what happened in the markets, if you ask me, I would still say like it's a regular market. Maybe some people think like, oh, something has been crazily happening. Market has been keep on started slowing, going down. But how I do see this market is like, I see this market only as a regular day. It's just a regular day. Yes, regular day market went down. What you should not confuse here is like looking into the FIA activity, trying to look into DIA activity. Now, many people think that I can identify FIA volume, DIA volume, because that has been advertised in many places. Like you can look through the order flow and you can see the FIA activity and DIA activity. See, you can understand whether it's an institutional volume or whether it's a retail volume. You can bifurcate and you can see that. Institutions can be pro traders, institutions can be FIIs. Of course, mutual funds, they don't play in Nifty futures aggressively because as of now, their participation is very, very low. Low or next to nothing. That's what we can say here. Most of the engagement happens from the FIIs. Most of the engagement happens from the pro traders. Most of the engagement happens from the high frequency traders. But you cannot clearly say who had made the transaction. Is the FI had made the transaction or not? Order flow will not tell you. But from the order flow pattern, there are certain times you'll be seeing an absorption activity. Those are the places you can see the presence of institutions. There are times you'll be seeing an initiative drive, a strong initiative drive with strong flow, strong volume. By looking into the overall volume activity and the price action pattern, yes, you can definitely say whether it is done by an institutional activity or not. At what zone they are playing, that you can tell, but you cannot clearly bifurcate whether the volume activity is done by institutions, by the FIIs, or the pros, or by some intraday traders. That you cannot clearly classify. Yes, intraday trading activity to some extent we can monitor and we can say, hey, this trading activity is like done by intraday traders. Maybe if you are having some fair idea about market profile also, then we can clearly say, hey, these are the places intraday traders are the one who is coming and participating. These are the places some strong institutional flow is happening. So probably if you're using market profile with the order flow, yes, it is kind of an combo uh, which will yield you on better results. But only using order flow alone, we cannot say, by looking into the volume activity, you cannot say where the FIs are buying and where the FIs are selling. And to be frank, that is not much of an importance at all. What FIs are doing, it's not much of an importance. What market as an group, collectively, what it is doing, that is what it is important. That is how we have to see through the order flow information. That is very, very important, right? So does that FIA, DA activity that we get on a day-to-day basis, is that importance? Will it have any impact on the order flow? If you ask me, absolutely zero. So what FIA, DA activity is happening? Yes, it may be an area of importance if you are an investor. Maybe it's an investor worry. But if you are a trader, you should have the mental flexibility to trade on the upside also, on the downside also, because the market gives an opportunity to trade. Maybe from an intraday perspective, if you are an intraday trader, you should have the flexibility to trade the long side also and the short side also. There are many times market will be giving opportunities on both the sides, and that is applicable even if you are a short-term trader also. Even if you're a short-term trader, you should have the mental flexibility irrespective of what is happening. So there are times, right? Recently we had gone through Israel and Iran tensions. But despite that, order flow had given an bottoming out clues. That is what I'm going to show you here. Order flow can also predict the market bottoms also. So last Friday, this was like one of our sessions we discussed about how the order flow is bottoming out. So been discussing about this is like from Monday, April morning post. So the people are asking like, can you please provide this week top-down analysis? What is your observation? So one of my observations is like there has been bottoming out odds from order flow analysis. So order flow has a smart money absorption commitment. So around last Friday, there has been an second half mostly. I'm not very sure, probably around 12 o'clock or 1 o'clock, around that mid of the day. We had seen some smart money absorption commitment. And then we also got some couple of confirmation we got over here. So the order flow and open interest had given last Friday early clues. That is what we learned about that. And then we also got some simple clues from open interest. So very rarely we look into the open interest. So open interest also gives some clues that 22,000 May series, we had seen some put sellers coming for our defense. And we also looked into another volume information from VSA. So VSA, we identified market bottom. VSA hourly and daily turned bullish, and yet to see some acceptance from market profile. Later on, market profile also given some clues. We had seen some daily sentimental changes also. But the most important clue, the very first clue, what we got is from the order flow. So order flow is the very first tool always to give some sort of an early confirmation in the markets, right? So usually we will not be looked through the order flow positionally, but this is the only one place. The commitment part is the only part where the traders are giving maximum commitment, right? So where the traders are giving the maximum commitment, that we will be able to see from the order flow. So that information, we can use it from our positional point of view. Maybe for very short-term trades, we can use order flow from a positional point of view. And that is something very important. All right, coming back to the topic here. So that is with volume cluster. Volume cluster also plays a major role, particularly during events. Right? The next upcoming event is going to be during the election season. During the election season, you'll be finding a lot of interesting volume clusters. Usually, volume clusters will be watching around the open, but there are times we'll be watching volume clusters even during events also. So the events like budget day, events like election results, central election results, state election results, sometimes event like RBI policy announcements. So those kind of important events, we will be watching the volume cluster activity. Or if there is any news is happening, sometimes what happens is like the Iran-Israel kind of tensions, it will suddenly, if the news, any negative news has been announced or any positive news has been announced, suddenly there will be some sort of positioning will be happening in the markets. Now, during those locations also, we will be watching the volume cluster activity. Very, very important stuff, right? It's a highly underrated stuff, but if you learn how to use the volume clusters, then the way of thinking in the markets will get better. And not only that, talking about the price action over here, just give me a sec. So, what are the list of order flow strategies that you can think of? There are a lot of order flow strategies are there, but here are some of my favorites. So here I'm showing you like almost uh, 20 kind of strategies. Zero volume zones, clustered volume analysis. That's what volume cluster is all about. Delta positioning, delta unwinding, exhaustion bar trading setups, momentum reversals, momentum auction reversals. And then we talk about a very interesting concept called secure low, one of the way the market does an exhaustion. And then trapped buyer, trapped seller, another way the markets do exhaust. And then there is also genuine buyer, genuine seller, which is not shown over here, which is also part of trapped buyer, trapped seller concept. And then analyzing the COT levels, how to analyze the COT levels and how it is important in predicting whether it is a successful breakout or it's going to be a breakout failure. Because many at times we'll be having the confusion, right? Whether this breakout is a successful one. If it is a successful one, how to trade it, where to keep the stop loss. So those kind of techniques we'll be able to analyze using the COT. COT means commitment of trades. How bigger the traders are giving commitment, we'll be measuring in the form of delta typically. And then trending day odds, whether the market will turn into a trend day or not. That kind of odds, how I can use order flow to determine. And then low volume market top. Sometimes the market will be topping out with the ultra thin low volume bars. So how to sense those things, how to watch in real time, and how to take a trading decisions during real time. Right? That is very important. So using low volume market tops, we'll be able to identify such kind of exhaustion. Sometimes the market do exhaust with lower volumes. Sometimes it happens, mostly it happens on the top side, but very few times it happens on the downside also, right? So sometimes downside also market can bottom out with a very thin volume. Sometimes we'll be seeing an breakout failure setups, very easy to identify from order flow, very important, very crucial trading decisions you can able to use using breakout failure setups. And then analyzing the volume flow of the day. So as a trader, as an order flow trader, you should have a fair idea about what is the overall volume flow for the day. So then it will give you an idea how much emotions are there in the markets, how the opening volume flow is, how the midday volume flow is, how the closing volume flow is. So that will be giving you a fair idea how the traders are competing in the markets. So more repeated exercise that you're going to do, better the trading skill that you can acquire from order flow. And of course, event trading. So events like central elections, events like RBI policy announcements, budget days, or any geopolitical tensions which is happening. So those kind of times, how we can use the order flow information. And then stacked momentum trading, particularly to identify momentum. And order flow sweeping, again, one form of a momentum. Mostly it's kind of an algorithm, usually plays in the markets, how to identify such kind of algorithms in the markets. And then momentum exhaustion and divergence, delta divergence kind of trade setups, how to recognize stop hunting using order flow, and COT breakout failure setups. So these are the list of uh, strategies we will be covering in our order flow masterclass, right? So if in case you're planning to attend order flow or upcoming session, you can always go to learning portal. So from there, you can go to learn.marketcalls.in. You can go to the courses section. From here, you can go and see the complete details about order flow analytics masterclass. So you'll be able to almost 19 sessions is what we are conducting over here. So close to close. So a lot more order flow drills is what I'm going to provide. Most of the order flow drills are relevant to the today's market situation. And most of the examples will be primarily from Nifty, Bank Nifty. And maybe this time I'm planning to include a couple of stocks also, right? And usually we will be able to apply order flow on 5-minute charts. Typically 3 minutes or 5 minutes is what the preferred time frame is. However, if you want even more fast scalping, you can switch to range bar charts. So range bar charts also provide very interesting insights from a very, very quick scalping odds. So particularly, let's say your holding period is like next to 5 minutes or 10, 15 minutes. So from that point, from a very, very short-term trading decisions, how we can do using the range bar charts. We'll be discussing from that angle as well. So overall, what you can expect from the session is like you can expect more order flow drills, plenty of order flow principles, and complete idea about where the institutions are coming and playing, where the retail traders are coming and playing. Of course, we're not going to bifurcate where the FIs are coming and playing, but that is not our area of importance. That is not possible also. By looking into the volume alone, you cannot tagging and say like, hey, FIs are coming here, TAs are coming here. That's totally nonsense. But you can anticipate, you can a lot of deeper insights about order flow. That is what you can anticipate from our sessions. That's been always there. That always you can anticipate in all of our training sessions. So I hope this session gives you clarity how to read through the order flow information, how to understand what is in volume cluster, how to see the delta activity, what is the importance of the delta activity. Particularly reading the delta gives you a fair idea about what is happening in the market. Delta alone, it is not important. Delta combined with volume flow, combined with volume cluster, so combined with a lot more trading principles, helps you to trade any kind of an intraday market opportunities, right? So let me pass here. We'll come back next week. 4th of May 2024 is what our training session is starting up. So in every session, you can anticipate more order flow drills. So see you in the order flow masterclass. Thank you.